Morning everybody, it's Chris here from Serene Education with the 4 Majors Minutes update for the 14th of June 2011. I'm just going to be looking at our Euro against US dollar on our CTC strategy template. Let's have a look at the daily. Okay, so we know we are in an uptrend. That was the major trend to start with, and then we had a break of it and the pair pulled back, and we've seen the pair pull all the way back to roughly around the 14,500. And we've seen a lower swing, so we've got an intermediate low trend to the side. However, we've seen price pull back significantly since then, and this little intermediate uptrend has been broken, and now we see ourselves back down to previous support and resistance levels. Pair yesterday bounced off a previous resistance level and support at roughly the 14,200 mark, and it's back up trying to break through the 20 and 50 period moving averages. We have got a red arrow on a consolidation bar at this level, and the CTC is still blue. However, if this pairs to revert back to the upside, we obviously need to see a break and close higher than the moving averages, and then we could look at the intermediate trend above us as a potential first target. We've been in the past, there's no reason why we can't go there again. Pair has found support and is moving higher, so let's see if that bodes well or pulls out today. So as we stand at the moment now, the 50 period moving average is pretty much on the high end of the candle of the previous swing here. So roughly around the 14,200 mark. So if we go to an hourly chart, for example, you could see that there's prior resistance and we've broken through with an indecision candle, and we're slowly making headway, and you can see over the past couple of days we've got swing highs, and now we've broken above a previous resistance level. We need if price can stay above that level, then obviously we can see a kick on to the upside. First initial target would roughly be around here at the prior support and resistance level around the 14,500 mark. Be aware that there is a swing above us which takes us close to the 200 period moving average. So ideally a first target roughly will be around here at 14,400 or 14,500 mark to start with, as long as pair can stay above the 14,200 mark. Next pair is the UK sterling against US dollar. Let's have a look at the daily. Yesterday we had a bullish engulfing pattern. Price is able to take back all of what it lost on Friday, and by doing so we've seen price rally overnight on the Asian session, climbing higher. We do have a down candle, it's now testing that intermediate downtrend. We have lower swings from the downside, lower swing, and now price is now testing that area on this uptrend. So I'm just going to put these in so you can see them nice and strong. There we go. So there's a nice, it's being squeezed now. Are we going to see a bit of a pullback now because we're trading above that? Ideally we'd like to see a break higher. A break of the previous swing down would then cancel this intermediate trend, and then we should be looking for higher highs. Ultimately, if a break above the 16,400, then we're looking at roughly the 16,200 mark, and then ultimately way up here at 1670 again. So all those will be factors today. Just have a look and see if there's any news out to either help this pair further to the upside, will give it a significant break higher, or is it going to be a factor and we could see it pull back, and then we could see the lower end of 16,500 being reattempted during the latter quarter of this week. The 4-hour time frame, you can see prices trading well above the 200 period moving average. Notice the higher swings on this pair to the upside. We've got a bit of resistance at the top. That's the all-time high. We've got an area of possible resistance of 16,500. But as it seems now, we could see prices pretty much moving to the upside after a lower swing. So CTC's gone blue. If you look at the hourly, same, slight consolidation, but you can see trading above the 200 period moving average. And notice the higher swings, and it's got higher as we progressed higher. We can see the price has really rallied, and we're now heading towards the 164500 mark. CTC's in our favor. The same can be said for the 30-minute time frame. Notice pullbacks, higher swing pullback to the upside, trading above the 200 period moving average. Prior resistance, support, and we've punched through that on Asian market trading. And now we've also broken through another support resistance level at 164100, and we're now testing the upside. So as long as we can stay above the 164100 mark and we can find support here, then we could see another push higher, and then we could see 164500 being tested quite soon. Next pair is US dollar against Swiss franc. This has found a very strong support area. We've seen the US dollar try and bounce higher, but it's come unstuck at the first hurdle, the previous swing low, and we've seen it drive lower yesterday, and the Asian market is trading in a very indecisive range, but nonetheless we've battled to break below or above a previous swing low. You can see the price was pretty much to the downside. We had swing low, and now we've found support, and we try to attempt to trade higher. You notice this candle over here failed to close higher. The second candle attempted to do that, a spinning top at level, failed to break higher, and then we've had almost a carbon copy of the same candle the previous, and we've seen price move lower. Is this setting up for another shorting opportunity? The longer it goes sideways without breaking highs, will obviously confirm that it's just in a consolidation range with a possible continue, because we are still in a negative trend. Remember that price is still very much to the downside, and as long as price is trending to the downside, we should be looking for consolidation breakouts. It has to close above the 0.84550 mark at least to be considered bullish, and even then, so you looking at the next target at 84550, which doesn't really leave you with a lot of momentum to capitalize on. So keep it in mind. So we've got to see a definite close on the 842800 mark at least intraday. So let's just pencil that in. 8425. Oh, sorry, 8325. I'm going mad here. Apologies, guys. No, that's right, 8425. So it's got to be trading well above that area there to be considered better. I think it's more around here, if I'm not mistaken. You've got a definite 83.85 mark prior resistance. You can see the support, the band just trading within a range, and as long as it's doing that, you can see that it needs to get well above the 84.2500 to be even thinking about going long. It's trading above all the moving averages, the 200 period moving average in particular above us, and the 50 not too far off. And you can see it's quite erratic, but you'll notice that there's definitely a support area on this pair, and as long as it's trading above the support, then we're going to be consolidating, because we're in a downtrend. It needs to be breaking higher previous high swing lows in order to be considered bullish. In this case, it needs to be trading well above the 84.2500 mark to be looking for any possible moves to the upside. The last pair of the day is US dollar against Japanese yen. Let's look at the daily. You notice that the 80 mark has been a long-term support. We've had a clear bounce of it back in early May, and we're back around that area again. We saw price tip its hand below, but failed to generate enough momentum to break lower. And so the next candle was a bullish engulfing. We saw price revert to the upside, but then it's been trading in a range, very indecisive. These indecision candles, these doji candles, a lot of dragonfly, shooting stars, whip formations, and It's now topped out. So ideally we want to be seeing price close higher with a nice significant bullish up candle above the 80.440 mark, and we could look at a possible target, first target roughly around the 80.7550 mark. We do have a down candle, and you can see price is testing that as we swing the previous swing low, and price is there trading at that as we speak. So on a daily candle or daily chart, we do see price testing the swing, intermediate swing. You can see on a major time frame this pair is negative, but negative in a consolidating range. So we're going sideways and price is being pushed lower. Bar this one over here, this was the intervention candle or setup. We saw the Japanese government in the G7 countries all start selling the Japanese yen and purchasing US dollar to try and get a bit more oomph in the market, but it didn't materialize, and we saw price revert back down to its key levels and its daily trend to the downside. So the major trend is negative, and intermediate is also negative, and you can see that yesterday's candle pretty much pierced higher, but trading was down the low end of the range, which doesn't give you a great feeling of there's going to be any further upside movement. So look for possible breaks lower, and if that's the case, then look at the 80 as a possible first time target. Break lower than 80 and close lower with significant bearish movement would definitely set up for further downside movement, and then we could look at anything short. Well, we've been to areas such as 78, 88 roughly, and then all the way down here at 7700. So there's a lot of scope for further downside movement. Has to break higher than the intermediate trend, and ideally we want it to be trading well above the 89 mark in this case for any potential upside movement. That's it for today, guys. Hope you have a fantastic day. Make sure you follow the rules of CTC. Make sure your money management's in place, and most importantly, trade serenely.